Okay, so here we're doing the Mathematical Literacy Paper 1, the November 2020. So before we actually start with the paper, I just wanted to highlight something about the paper that you'll be writing this year. So the new 2021 changes, which is the right-hand side of this table, you can see that with finance, it would contribute actually 60% of the mark. Data would contribute 35%, and probability only 5%. Hence, it is absolutely important for you to be able to do your finance very well with all the topics from profit and loss, expenditure, and also taxation as well. On the matter of taxation, in actual fact, in this video, that is what we're going to be focusing on. So basically with this, the question that we'll be doing here, they will have to do with questions on taxation. So, and another thing with paper 2, notice that yes, finance is not really given a mark. However, finance will be asked in the exam in that exam as well, because when you think about measurement and maps and plans, you'd actually find that some of the questions there, the context in which they're going to give it to you, you'll maybe have to calculate the cost price and other finance related topics. Okay, so it's also important for you to actually know the finance also for paper 2. Okay, so here's paper 1 and we're gonna do question 2. So 2.1 basically says that there is Dean Peterson has a clothing account at Markham Clothing Store. At Markham, a customer can choose either a 6-month or a 12-month revolving ongoing payment option. And then we have Annexure A, which shows Ben's Clothing Store statement from Markham for a certain period of the year, right? So there's this account statement. This was sent on the 15th of January 2019, and as you can see, you actually have the 6-month revolving period, which is the 101 rand 99 cents, and then you can also see that there's 12 months revolving period. There's then F&B electronic payment. There's also the installment that was due, which is 0 due, right? And then again, from the 17th of December, you can see that there was a purchase at a mall, and the 19th as well, and then the 31st, it's also an electronic payment. And then for my kitchen as well, you spent like 26 rand, and then F&B electronic payment again, and so on, right? So as you can see, there's an installment over there, and what is due, and so on, right? So basically the first question asks us, write down the total balance owing on Ben's account. So what is the total balance owing on Ben's account? This is the final amounts, right? And the final amounts in this case of the amounts that is being owed is actually the 4,656.71 rands, right? And that's the answer for 2.2.1. And then for 2.1.2, basically it says give the full date on which the current installment is due. But remember, at the top there, we did see that this statement was sent on the 15th of January 2019. Hence, the following month would be the 1st of February 2019, right? And so that would be your answer to 2.1.2. And then 2.1.3 basically says state the opening balance of the 12-month revolving account option. Now, with the 12-month revolving account option, you can actually see that they actually did tell us it's the 1,215 and 36 cents, and so that would be your answer there. And then write down the price of the item that was returned, right? So which one would have been returned in this case? So as you can see, when you see the description there, there's purchase, and then there's a purchase returned, which is the 3,750 rand. And then we also look at 2.1.5, and 2.1.5 basically says determine the total amount paid using F&B electronic payments. But with the F&B electronic payments, we look at the reference. So we have the FNB electronic payment. The first one was 101 Rand 99 cents, and the second one was a payment of 698 Rand and 1 cent. And basically then you'd add that together and you'd actually find that that's actually 800. So the FNB electronic payment, all of it was 800 Rand. And then we have 2.1.6. So the selling price of an item includes 15% VAT, right? And then they say calculate the price of the item purchased on the 19th December 2018, excluding VAT, right? So because they're actually talking about 2019, the 19th of December. In this case, here on the 19th of December, which was the year before, remember this was still in January, but the year before, the month before, this on the 19th, it would have been the 3,000, so it's 4,000, it's the 4,000 purchase of 4,000 Rand. So when they want us to actually determine the calculate the price of the item purchased, right, excluding VAT, then that would mean that we'd actually have to take out VAT. So how can we do that from the 4,000? We can say 4,000 times 100 all divided by 115, right? And that would actually give us 3,478.26 cents, right? Or you could have done it in a different manner where you'd actually first calculate the VAT amount, and the VAT amount in this case then would be 4,000 times 15 over 115. That would give you 521 and 74 cents, and then that 521 74 cents, then you'd subtract it from the 4,000 Rand, and then you'd get the same answer, being that it's 3,478.26 cents. And then we move on to 2.2, and then they actually say, Dean, a 25-year-old male earns a taxable income of 305,174 cents. He started his first job. He started his first job the first of March 2019. And it says tax payable by an individual for the tax year 1 March of 2019 to the 29th of February 2020 is indicated in the table below. And as you can see in the table below, we have the tax brackets, the taxable income, and then the tax rates. So the first question that we actually have to answer here, it says 2.2.1, name the government institution responsible for collecting tax return forms. And we know what that is. That is usually said as just SARS, but we can rather write it out completely, so it's the South African Revenue Services. And then the next question says, write down the tax brackets that will be used to calculate Dean's tax payable, right? Now, when you look into which tax bracket you would fall into, now it depends if you look at this taxable income, which is the 300,000, to be either the amount that he's earning in a month or a year, right? So if you say in a month, then he would fall into the tax bracket 2, but then if it's for an entire year, for an entire year, it would fall into the tax bracket 2, but then for an entire month, it would fall into tax bracket 7, because then it would be that 300,000 times 12, right? Those 12 months to actually give you a value which I think is around 3.6 million. So that's why it's either 2 or 7. It's 2 or 7. And then they actually ask us and say, calculate the monthly tax payable by Dean before any rebates are deducted. So if we look at, for instance, the tax bracket 2, then we'll first calculate the annual tax before rebates, and basically that we actually given in the tax rate. And for tax bracket 2, you can see that it is 35,000 plus the 26% of the taxable income above 195,000, right? And basically then you'd use that formula. And so you'd say it's the 35,000 which we found at the tax rate and the 26%, and then you take his taxable income, which was the 305,174.44, and you subtract it by the 195,820, and then you actually get that would be 28,424 and 35 cents, and that you would add onto the 35,253. That would give you the annual tax before rebates, which is the 63,677 and 35 cents. But then after that, notice that you still need to calculate the monthly tax before rebates. So then the monthly tax before rebates, then you divide by 12, and then you get that it is the 5,306.45, right? And then if, for instance, you had said he falls into the tax bracket 7, then you use the formula again the same way that we had done it with tax bracket 2, where you use the tax rate, which is 532,000 and 41, then you add it with the 45% of the 1.5 million of tax rates, right? And so then you'd actually first have to get the taxable income over the 12 years. So you'd actually take the 34,000 and multiply it by 12. Then you'd actually get there that it's actually 3,662 of 93.26 right? And then you subtract that by the 1.5 million, and then you get your answer to be actually 972,941 and 0.98 cents, and then you'd add that with the 53,000, and then you actually get that it is 1.5 million, just above 1.5 million, right? But then again, you need to first lastly calculate the monthly tax before rebates. Therefore, you divide by 12, and then you get the answer to be actually 125,415.25 cents. And then we have the last few questions. So then they say table 2 below indicates the rebates for 2018, 2019 and 2019 and 2020 tax years. So then the rebates for the 2018, 2019 and 2019, 2020 tax years, you can see that we have the tax rebates, and it is a primary, secondary and tertiary, and the age below 65 is primary, and so on, right? And then we have the tax year for 2019, 2020 and 2018 and 2019. And so the first question here, it says identify the tax rebates that Ben qualifies for in 2019, 2020. So you go into the tax year, which is 2019, 2020, but then remember his age, he is 25, therefore he falls into the primary rebate, which is going to be the 14,067, right? And then the next one, or the last one, last question is that state the number of tax rebates a 75-year-old man will qualify for in any year, right? For in any year he would qualify for actually 3. So other than that, I really hope that this video is helpful, and I'll see you next time.